Hi traders, I want to welcome you back to my channel. My name is Ruti Malawale. I'm a financial market analyst, forex trader, and mentor. In today's video, I want to show you a simple Fibonacci strategy that can be used to determine take profit, stop loss, reversal points, entry for pending orders. Now, this tool can greatly improve your result as a forex trader. Before we get started, if you are yet to subscribe to this channel, please click the subscribe button and also the notification bell so you can get notified whenever I drop a new video. All right, so let's get started. Now, to get to Fibonacci tool, you go to the upper part of the MetaTrader platform in this region I circled here, and that's where you have the Fibonacci tool. Now, when you anticipate that price will go in an uptrend, it's often advisable that you pick up price coming from a support level, because that is when you can really be sure that, maybe you have other patterns to determine that, but let's primarily start with price hitting a support level. Like what we have here, we have a support zone, and then we'll click on our Fibonacci tool. Now we drag the Fibonacci tool from the most recent high to the most recent low. In an uptrend, when we anticipate an uptrend, we'll drag our Fibonacci tool from the most recent high to the most recent low, and that's what we have there. And you can see that price actually went up in the bullish direction. Now, how do we use the Fibonacci tool in this case? We now use it to determine the take profit level. Now, usually take profit level can be any of the Fibonacci levels from Fibonacci 38.2 to 50 and to 61.8. But then a lot of emphasis is always put on Fibonacci 50 and 61.8 as the take profit level. Now, these levels are also regarded as reversal points because there's a high probability that when price gets to this level, we have that possibility that price could reverse. All right. Now let's look at another instance. This is a GBP card on the 4-hour time frame. Let's look at USOIL. Now for USOIL also, we can clearly see that price hit a support level and broke out above the trend line. Again, we'll pick our Fibonacci tool, we'll drag from the most recent high to the most recent low, and we can clearly see that price, broke out and went in the bullish direction. And price hit Fibonacci 50, which could have been a take profit level, and Fibonacci 61.8, which is another take profit level. Now, in these two instances, price actually hit those levels and even surpassed it, went above it. Now, we'll look at the third scenario. Again, we have a support level, price hitting the support level, and we have the Fibonacci levels again, and we discover that price, was able to break out, and there was that take profit level. In this instance, let's say the entry is around this area. Even generally, you can use Fibonacci 23.6, as your entry, while you target Fibonacci 61.8. 50 as a take profit. In this instance, that's about 168 pips, and Fibonacci 61.8 gave about 244 pips. That's a swing trade. Now, these three scenarios are given. These are when you see price going in a bullish direction. Now, I've shown you how price can go in a bullish direction and the potential take profit level using the Fibonacci tool, especially Fibonacci 50 and 61.8. Now, the question is, in this instance, where will the stop loss be? The stop loss is usually at Fibonacci 0, preferably some pips below Fibonacci 0, because the idea is this. Now, if price actually hits a support level, most of the time it may not go back downwards, and that's why it's always preferable to use a support level, or when you have a pattern, a bullish reversal pattern, it can really give a high level of accuracy. So when price hits the support level, the high tendency that it will go up, that chance is quite high. But then peradventure things didn't go as planned, and price reverses again. Once price hits Fibonacci 0 and possibly maybe some 5 pips, you may use some 5 or 10 pips below Fibonacci 0 as the stop loss. And this can also be used for setting pending orders, because when price hit that support level, maybe at that time when you're trying to place the trade, the market was just somewhere around here, you can use the Fibonacci levels also as entry points by setting buy stop order. In this case, your entry will be on Fibonacci 23.6, and you can still target Fibonacci 50 and 61.8, and you could still see that everything went in line, with this trade. Now let's look at another scenario, and that is in the scenario where the market is expected to go bearish. Here is an example. We're using AUDCHF. Now this is AUDCHF on the 4-hour time frame. Price hit a resistance. We could draw a trend line. We have a rising wedge where we expect a potential bearish movement. And for a bearish trade, we'll drag our Fibonacci from a Fibonacci 2 from the most recent low to the most recent high. I'll say that again. For a bearish trade, we'll drag our Fibonacci from the most recent low to the most recent high after we have identified a resistance level or any other pattern that indicates that the price could actually go bearish. So we pick the Fibonacci 2, drag it. You drag it by, when you click on the Fibonacci 2, you drag it to the most recent low. You left click on your mouse and use your long finger, your middle finger to drag. That's how you do it. All right, from the most recent low to the most recent high. Now we could see that price actually broke out, and this time around, price also hit a profit level 50. Now, in this instance, if we were to use our pending order, the trade will have been triggered at Fibonacci 23.6. That is usually the entry point if you're using Fibonacci 2 for pending orders. And take profit will have been any of the levels 38.2, 50. But then, like I said earlier, the emphasis is usually more on Fibonacci 50 and 61.8. Now we could clearly see in this instance that price got to Fibonacci 50 at let's see how many pips. Price got to Fibonacci 50 at about 44 pips, and from there price reversed. I said earlier that these levels, Fibonacci 50 and 61.8, are actually reversal points. Sometimes when price get there, it will react either as a retracement or a reversal. So generally it's used as the major take profit levels. Let's look at another scenario. This is a AUDJPY on 1 hour time frame. Again, we cited a resistance and a rising wedge. Technically, it is anticipated that the price will break out in the bearish direction. Again, we'll pick our Fibonacci 2 and we'll drag from the most recent low to the most recent high. So I'll click on the tool now and I will drag it. And in this instance, again, we could clearly see, you can do entry manually or you can use pending order, in which case if you're doing pending order, entry can be set, your sell stop order can be set at Fibonacci 23.6, and your take profit levels can be Fibonacci 38.2, Fibonacci 50, and Fibonacci 61.8. And in this instance, we could clearly see that price broke through all the levels. This is a very good one. Price did not reverse. So we can see that to Fibonacci 30.2, price hit 28 pips. To Fibonacci 50, it hit about 50 pips, and to Fibonacci 61.8, about 73 pips. All right, let's look at another scenario. Now we have Euro CHF. Now we don't have a resistance in this case. We just have a rising wedge, which is equally a valid reversal pattern, chart pattern, a bearish reversal pattern. So we can still draw our Fibonacci 2 because we're looking for a bearish trade from the most recent low to the most recent high. So I'll pick the tool and I will drag it. I'll left click on my mouse and use my long finger to drag. Okay. Now, in this instance, we could clearly see entry can be done manually or pending orders could be set. If it's a pending order, entry will be at Fibonacci 23.6, and take profit will be on any of the Fibonacci levels, 38.2, 50, and 61.8. And we can clearly see again that price hit Fibonacci 38.2 at 18 pips, Fibonacci 50 at 31 pips, and Fibonacci 61.8 at 46 pips. And we can clearly see that once price hit Fibonacci 61.8, there was a reversal. So that tells you that these levels, to a great extent, can be used, because at least you're guaranteed that if price could break out, of the trend line or whatever strategy you use, there's a possibility price could hit Fibonacci 38.2, 50, and 61.8, in which case 61.8 and 50 are actually regarded as reversal points. All right, so I think I've been able to cover in this short video, how to use a Fibonacci tool to determine your take profit level, your stop loss level, your pending order, where you put in your pending order, you buy stock or you sell stock order. As I round up again, I want to use, I'll just go to the previous, I can use this current one, where the take profit, the stop loss in this case is also at Fibonacci 0. So peradventure the price reverses on 18 Fibonacci 0 and maybe just on 5 pips above Fibonacci 0, that becomes, the stop loss. All right, so that will be the end of this video. If you enjoyed this video, please click on the like button and drop a comment. And if you're yet to subscribe, please click the subscribe button also and click on the notification bell so that you can be notified whenever I drop a new video. Now, when you like this video and you drop a comment, what you're doing is that you're going to be you trigger the algorithm, YouTube algorithm, to show this video to many other traders who might be interested in similar content. And finally, if there's any topic of interest that you want me to drop a video on, kindly drop it in the comment section and I will make a video on such a topic. All right, I'll see you in my next video. Bye for now.